Wednesday, July 6, 2022, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at how all the major currencies are sinking, but the dollar will sink as well eventually. Yes, it looks like the dollar is very strong as per the dollar index, but that's just an illusion, and that's what we're going to look at today. Before I start, I like to say I interviewed Rafi Faber yesterday about a topic he's been covering the last week or so for Arcadia Economics and for his YouTube channel, Rafi Faber. Highly recommend you subscribe to Rafi's YouTube channel. He does some great content. We need to see his subscriber count go up. We need to see him at 10,000. I think he's got about 7,000 subscribers. I'd like to thank you again for your interest in my channel. We reached 64,000 subscribers yesterday, so that's kind of neat. Monaco 64 with 64,000 subscribers, but it's just a number, of course. What I try to do here is provide you with good content and information and my opinion on things, of course. So I've been looking at currencies for many decades, even before I started looking into the underlying fragility of the whole system. I used to love currencies for some reason, even back in the days where I was just finishing university in Switzerland. I was doing a degree in international relations and economics. I used to follow the markets a little bit, read the papers, and I always used to like looking at the currency section. Maybe it's because growing up in Brazil, we had so much inflation in different currencies, and we had to keep track of the dollar, and then also from traveling around and to Switzerland, the Swiss franc. So currencies always interested me, and even back then I realized that it didn't matter what your investment was. If you had that investment in a currency that was losing value, your investment wouldn't do well. So I always thought it was the common denominator for currencies. And then later on in life, when I started working in the city, and then I got this private interest to look into things like gold, the monetary system back in the early 2000s. I started looking into the fragility, the history, especially after you buy gold and you hold that coin. You want to find out more about gold. And I learned things that I'd never known before. This history that is still kept hidden in the mainstream academic world, mainstream media, mainstream economics, right? And I started my own blog back in around 2006 called forsoundmoney.com. One of my cousins who was around at the time, he stayed with us a few months. He was an IT guy. He helped me set it up. And I wrote quite a bit on that blog, but I didn't really have that much time because I was working full-time in the city. It was something more for fun. But you probably heard about this, of course. Some of you haven't because you're new to the channel. And I wrote an article back in 2006, 18th of December 2006, entitled "They Are All Sinking." And I was able to bring this article back through the Wayback Machine archive, which is great because that blog is gone a long time ago. So I'm going to read to you what I wrote back then to try to warn you that holding the fiat dollar, and I say that because a real dollar is a weight of silver, I would say, and also gold, is very dangerous. Yes, the dollar looks very good right now versus the pound, the euro, the yen, and so forth. But my analogy is that the Bretton Woods fleet is sinking, and you will understand what I mean when I say that. But the Bretton Woods fleet is sinking. The USS Dollar is looks very solid, and people are jumping off the smaller ships onto the Dollar, not realizing that the Dollar is also gonna sink instead of jumping onto the lifeboats, gold, silver, and anything that you can hold on to, any hard asset, right? So you don't sink. So let's go through this. So December 18th, 2006, they're all sinking. There has been a great deal of speculation over the last few years over when or whether the dollar will crash and burn. One thing many analysts, economists, and speculators have not taken into account is the fact that all other currencies on the planet are derived from the dollar. One has to go back to July 1944 to understand the nature of our present monetary system. That was when the major Allied nations gathered at Mount Washington Hotel in Bretton Woods, New Hampshire, to draw up a new financial architecture that would become the new backbone of commerce and trade for the Allied nations after the end of World War II. The United States held over 50% of the official gold reserves in the world at the time. And with that in mind, the dollar was formally made into the reserve currency for the Western countries. It was decided that for every $35 foreign central banks held, they could receive 1 troy ounce of fine gold in exchange for it. Concurrently, fixed exchange rates between the US dollar and the Allied countries' currencies were decided upon. As one can see, gold was at the base of this monetary system, and the exchange rates between the dollar and other currencies were just a derivative of this system. So yes, even the euro is a derivative of this system, because the euro is a derivative of the Deutschmark, the French franc, the Italian lira, the Dutch guilder, the Belgian franc. That was part of this original system. The Bretton Woods system ran smoothly up until the mid-1960s, but the Vietnam War and the welfare state started to weigh on the system as Western governments thought they could spend money on guns and butter, and that somehow in the long term things would get better. So as usual, government profligacy wrecked a monetary system. A monetary system with gold as an anchor like the Bretton Woods system stood in the way of the welfare state, and politicians did not want to do away with the status quo. By 1971, the US government had printed too much money to pay for the Vietnam War and Lyndon Johnson's Great Society. These new dollars being printed were not being backed by a corresponding amount of gold, $35 per troy ounce. And as a result, foreign US creditors, foreign central banks, were demanding payment in gold, and the situation led to an unsustainable situation which could have led to a run on the US Treasury. So on August 15, 1971, President Richard Nixon shut the bank. I call it shut the bank. They call it closing the gold window, right? And as a result, closed the gold window, which meant foreign central banks and monetary authorities could no longer redeem their US dollar notes into gold. This act by President Nixon also led to the breakdown of the Bretton Woods system as the anchor of the system. Gold was abandoned. With the end of the Bretton Woods system also came the end of the fixed rate monetary system, and as a result, the global monetary system for the first time in modern times had no standard of value for which to base itself on. So yeah, the floating exchange rate was implemented around 1973, a year and a half or so later, and the dollar index was actually set up in March of 73 to keep track of this system that really had no anchor to it. So all the dollar index is measuring an unbacked I owe you nothing currency like the dollar against other unbacked I owe you nothing currencies. So that's all the dollar index is. Yes, it started trading at 100 in 1973. Yet right now we might be at 106. So how well has the dollar really done in the last almost 50 years? Well, it's up 6%, which isn't that much, right? So, since 1971, the dollar and the rest of the world's currencies have been sinking and gold has been rising. Yes, and I am aware of what happened yesterday to gold and silver, but it's up to you to stay on these sinking ships. I'm not. Let's continue anyway. The purchasing power of the dollar and its fellow fiat currencies have also been steadily sinking since 1971. So the other currencies. From 1971 to 1980, the fiat currencies of the world sunk very quickly and gold rose very fast. And the only way to save the fiat system was to allow short-term dollar rates to spike into the 20% level. Other currencies as well, their rates went up a lot too. The high interest rate scenario of 1980 saved the dollar, and as a result, all other fiat currencies. Gold, on the other hand, had risen in terms of dollars from $35 in 1971 to $875 in January of 1980. And then started sinking for the next 21 years as confidence in the fiat money system remained in place. Since 2001, the trend has changed and gold has been rising again, and the dollar and all the other major fiat currencies have started sinking just like back in the 1970s. Here's a list of the major currencies and gold's performance versus these currencies since 2001. So let's go through these numbers here. While the low for the dollar was around 254, some people think it was 252. And when I wrote this article, it was at 618. No, not 1,618, 618. So it had already gone up 143%. The yen as well had gone up 143%. The price of gold in yen, that is, it was, there's a low of 30,000 in 01, and it was at 73,000 right now. We're near 250,000, so it gives you an idea. Euro, actually the euro did very well in the first few years of the century because it only went down by 70% versus gold. It did even better than the Swiss franc, as you can see here. And the British pound actually as well was only down about just under 80%. And yes, it was trading at 316. And yes, along the way, there has been ups and downs, and it's been frustrating. But over the long term, gold and silver, for that matter as well, have been a very good place to park your extra savings instead of keeping it in these sinking currencies. It seems clear to us at For Sound Money that the only way to save the present monetary system would be for central banks and monetary authorities to let interest rates rise to their natural rates. The cost of such action would be disastrous to economic activity around the world. We know from past history that politicians would rather inflate than take proper action to stem the destruction of their fiat currencies. So I was warning about this, back in 2006, even before the 08 crisis. And here we are in 2022, and the central banks and politicians are still way behind the curve instead of reining in the inflation. So yes, it's all topsy-turvy right now. The dollar looks very strong, but pretty soon even the dollar is going to start sinking. And of course, the only measure for the dollar is versus gold because the dollars you've seen was at the heart of the system, and we're still a derivative of the Bretton Woods system. So there you go. Let's quickly look at where the markets are this morning then. It's 8:35 a.m. London time. We've got spot gold at $17.68. That's up about $4. Range has been 73 to 62, 1773 and 1762. Spot silver is up 3 cents at 19.25. High's been 35 and the low 18.90. The Dow futures up 50 points. The Nasdaq is up 40. S&P future is up 8 points. The FTSE is up 180 points, or 2.5%. It's catching up, I think, with the U.S. stock market that rallied relatively strongly towards the end of the day after the FTSE had closed already. Euro Stoxx 50 is up 70 or 2%, so doing well as well. To the sinking currencies, sterling is up slightly at 119.71. The euro is unchanged, 102.59. The dollar is down 0.2 versus the yen, 135.56. Dollar's unchanged versus the Swiss franc, 96.86. And the dollar is unchanged versus the yuan at 6.70. Look at the ruble. Oh, the dollar is very strong versus the ruble here. Dollar is up 10%, trading at 65.50. I would say that's to do with the fall in commodities yesterday. We had a day in which the Bloomberg Commodity Index fell about 4.5%, a day where crude oil fell 10.5% or even 11% at one point. But have a look at this chart here that Tavi Costa of Crest Capital put up yesterday. It seems like commodities are at a good level to get into. Am I giving you advice? No, I'm just showing it to you. So yeah, I don't see much longer term in this. I think the ruble is still a pretty good currency if you can get a hold of it. And I guess it's trading a little bit like a commodity currency. Back to the other currencies here. Aussie dollar up slightly at 68.12. The dollar is down 0.1% versus the Canadian dollar at 130.16. And the Kiwi dollar is up slightly as well, 61.80. General commodities. WTI crude is up 2%, just under 100. It's at 99.66. Brent crude is up 2.3% at 104.18. High-grade copper is up 0.25% at 3.42. And U.S. nat gas is up 2.8% at 5.65. And let's look at the 10-year yield to finish off here. I think yields dropped quite sharply yesterday. Yes, right now the 10-year yield is at 2.84, up about 3 basis points. And actually the 2-year yield is at 2.84 as well. So the curve inverted slightly yesterday. So that's another sign that investors and speculators, the markets, expect a recession, which isn't surprising. If you enjoyed this video, make sure you hit the like button. Please share it far and wide, and think about subscribing to my channel. So I wish you all a great rest of the day. Take care. Bye.